Yeah, sure, Karanya. Two things first. Let's just bring up the quiz question for today. We still have given our viewers 40 minutes more to answer this question. Interesting one. Which country has the highest market share in the global agrochemical export market? Your options are India, USA, China, and Germany. So do tweet to us. You still have 40 minutes, and if you're correct, you'll be featured on our channel at 11:45. Now that we've got that out the way, let's turn to the markets, and it's something we're not used to seeing over the last couple weeks. It's a sea of red, whether you look at the banking index, the auto index, the mid-cap index, the Nifty, the Sensex, metals. Doesn't really matter where you look, we're not doing well today. Nifty is firmly retraced from 13,500. We're at 13,448. And in fact, we are pretty much just above the low point of the day. So while we've seen a slight recovery, we still have a long way to climb before we even get back to where we opened this morning. In terms of what's losing, UPL, which has been spoken about quite a bit already, nothing to add there. Shree Cement, Ultratech Cement, two companies that were doing very well from the cement pack, firmly reversing today. Tata Motors reversing 2% down. IndusInd Bank down around 2%. You have some winners as well, so it's only fair to highlight those. You have Nestle, Asian Paints, Titan that are kind of bucking the trend and still managing to surge upward with some decent volumes, but even they seem to be quite challenged in the last half hour or so. So it's okay. Looks like a bout of healthy profit booking, and that's always good for the markets. And also it was fairly expected. You know, things just don't move one way, and I think we got too accustomed to that over the last couple of weeks. So today we're taking a bit of a breather, that can firmly be said. But let's go across now to my colleague Vivek, who's standing by, because RBI has issued some guidelines on NBFC dividend distribution, and it's got the sector in focus. Vivek will now walk us through the fine print.
Well, a very important development as far as the entire NBFC space is concerned. What has happened is that RBI has issued draft guidelines regarding the distribution of dividends by NBFCs from FY21 onwards. Now, this particular development covers all of the NBFCs, given the fact that NBFCs over 500 crore is considered to be systematically important, and most of the listed NBFCs fall into this particular bucket. Now, the main reason for such a development is that, remember, just a couple of days ago, the RBI had given out clear norms as to enabling NBFCs to turn into banks, thereby ensuring that NBFCs that chose to remain as NBFCs will face greater regulatory requirements. Move is as expected, is intended to bring greater transparency as well as uniformity. Now, as far as the entire RBI norms are concerned, the main development that is impacting stocks is the RBI dividend policy. And what RBI has said is that they have put certain NPA criteria, they put certain capital adequacy ratios as well as leverage ratios that companies have to adhere to, and have then classified them into certain buckets. So the stocks in focus, number one, M&M Financials, would be impacted as the company is not yet compliant with the net NPA norms. The company has reported an NPA of 4.7% in September 2020 against the required 4% as per the latest guidelines. LIC Housing Finance does not yet possess a 15% capital adequacy ratio. Also, two important stocks to keep on your radar is REC as well as PSC, given the fact that they would now be eligible for only a 25% dividend payout, while historically they have been giving a 45% dividend payout, and this is something that may reduce the attractiveness of both of these companies.
Thanks, Vivek, for that update. Let's put up the BNS and stock cloud as well to help our viewers understand which are the stocks in focus and they should be keeping on their watch list as well. Starting with two stocks that are in the news. On the back of corporate governance concerns, you have UPL, KRBL, both tanking in trade. REC, PFC, Vivek just talked about why the NBFC dividend distribution revision in the norm actually stands to impact stocks like REC and PFC, and that's the reason why both of them are looking fairly weak in trade. You also have a Maruti that's bucking the trend. They're looking to hike their prices starting January across all different models, and this is essentially to offset the cost increase that they're witnessing primarily on the back of commodity, and that's the reason why Maruti is in the limelight. Snowman Logistics yesterday was in the bulk deals list. Adani Logistics had sold a few shares in the company. IRCTC, the OFS, has opened the floor price definitely at a 15% discount to yesterday's closing price. Today the stock continues its downtrend. Ultratech, ACC once again in limelight, and finally you have Reliance as well that you need to watch out for in trade, and these are essentially the stocks that you need to keep on your radar. I think Maruti is the one which is bucking the trend. All the other names are trading quite weak. Kunal Bothra as well as Ashish Maheshwari both are on air with us today. Morning, gentlemen, and welcome on board. Kunal, coming first to you. You have 2 sell calls today. Which are the stocks, and talk to us about what are the trends you're reading on their charts.
So, good morning, Karunya. Yes, I think the weakness today, which you see in the markets today, is something which is very important to take note of, because we've managed to break a critical support for the Nifty. I think more than that, there was this gap up opening which was there for the Nifty. Where yesterday the index had opened with a gap up and it had built onto this gains. Now, in the last 2 months, we've not seen a filling up of the gap phenomena happening, but for today, we've seen the first sign of filling up of gap for the index. So I think that could probably result into the index going into some bit of a downward drift from a near-term view. So I would suggest a couple of sell calls. The first one is a sell on M&M Finance. I think that stock is showing signs of mild reversal on the short-term charts, specifically on the hourly time frame charts. It's broken below its major key short-term support level as well. So I would expect M&M Finance to correct from here on as well, expecting a fall closer to 160 for the stock. So that's the target range for M&M Financials, and stop loss could be kept at 175. The second would be a sell, and that would be a bit of a high risk sell. It's a sell on Tata Motors. Now, the stock has been doing exceptionally well. There are no two doubts about it on the long-term charts. But on the shorter-term charts, there is a fatigue which is coming across. We've seen some selling pressure emerging. Whenever the stock tries to cross by that 180 and 185 zone as a hurdle. So I would expect some selling pressure which could emerge into the stock price even from a short-term view. So purely a short-term trade, expecting Tata Motors to drift down slightly from current levels to a target of 172 approximately, and stop loss could be kept at 183.
Okay, sure. Thanks for that, Kunal. Hi, Ashish. Good morning. What's on your radar today as far as a high risk and low risk idea goes? And are there even, do you even recommend taking long positions right now?
Yes, in my view, market will keep on offering such opportunities where you are having 300, 400 points down market, and this is that a real good time to buy stocks. Because one thing is that the FI flows, which we have seen in last few months, will continue, because there are not too many emerging markets which are offering the kind of return what Indian markets are offering. So bullish trend is going to continue, and I think market like today should be used to garner the stocks which you might have missed in the rally. So as far as stock ideas are concerned, my low risk idea is Route Mobile Limited. Earlier also I covered this idea on your channel, and again I am very bullish on Route Mobile Limited future prospects per se. Again, to give you an example, their nearest peer set in US is Twilio Incorporation, which is also cloud communication company. And in this particular year, they have seen their stock moving up by almost 225%. So this is a $50 billion company, and the Route Mobile is a 6,500 crore company. And the sky is the limit for now cloud communication companies, because the way digital economies are moving, these companies are going to do phenomenally well. There's very limited floating stock now in this stock, because a lot of institutions have entered in the stock post listing. So I'll recommend this stock to buy with a price target of 1,300 rupees. As far as high risk stock is concerned, I like to buy an infra company named Delhi Buildcon Limited, which is India's number 2 company as far as EPC business is concerned after L&T. So they are having almost 25,000 crore executable order book in which they are going to execute in the next 2 to 3 years. and another 5,000 crore worth of orders are expected to come in the next 6 months. Besides this, they are also in final stage of divesting their HAM-based projects, so it will ease out more on cash flows. So Dilip Bilcon, in my view, is a good bet. Stock has seen 1,000 plus levels also in previous year, but at 400 rupees is a very good buy. So my target for this stock will be 500 rupees.
All right. We'll hope our viewers are taking note of the ideas that you both are sharing today. Just stay on hold with us. We'll shortly address the viewer queries. First, let me take it across to my colleague Utkarsh, who's standing by with an update on M&M that's also now looking to hike prices as well after Maruti. Utkarsh, typically around January, one does expect different models prices to go up. Can you talk to us about what exactly is M&M looking at?
So exactly. So what happens generally is that in December, it is the market leader which everybody waits for. And the market leader takes the price hike and then everybody follows that. Now, if you look at what M&M did in the pickup segment, they're the market leader. They've gone ahead and actually done a price hike and they have increased the prices by 10,000. It's almost 2%. Maruti has now announced the price hike. So now everybody will be following the queue. They are looking at how much of a price hike has Maruti taken. But generally, the price hikes have been at a range of 1%. That's a normal 1% hike which carries on every year. This year, I've been told by my sources that one, the commodity prices are really high. More importantly, they have taken a lot of hit in the last year because of the COVID, and they want to really make up for it, and that's why the price hike for M&M and Tata both can be in the range of 1.5 to 2%, which is almost 1% higher than it happens. And with M&M and Tata Motors, both are also having supplies issues with Bosch, given that the ECUs are coming in the vehicles, in the diesel vehicles of both the vehicles. So that is also something. That's why the demand is higher, and the companies will really like to at least make the most out of the demand it is there in the market, especially for Tata Motors is high demand in the market currently. But yes, from January 1, you will see a price hike. Everybody will be taking that price hike because everybody follows Maruti when it comes to price hike. But more importantly, it will be higher than last year. It will be higher than average 1% hike. It can go to a 1.5% to 2% hike in the month of January.
Okay, thanks for that very important update, Utkarsh. We'll be bringing you more developments on that as and when they come to light. But let's get back to what BNSN is all about, and that's of course the viewers and the viewer queries. And today we have Nageswar Rao, who's written to us. Apollo Hospitals is falling post the Amazon news. I need a fresh positional buy for long term. Also, why is there a downtrend despite good news? So quite a few questions he's raised there. Kunal, do you have answers to any one of those? And in general, what's your take on an Apollo Hospitals right now?
Stock which has done exceptionally well. So maybe in the last 2 days, we've seen some cool off into the stock prices from 2,500 to 2,400. This could be a routine profit booking, one frankly, because a 100-point drop, the stock price after more than 1,000-point kind of a rally in the last 6 months, I think would really not mean too much. So I would not give too much emphasis into the short-term corrections for Apollo Hospital till the time the stock doesn't break its key support levels. These could be marginal profit booking which could be happening into these names. The major support for Apollo Hospital on the charts is at 2,250 levels. So I think that's almost another 100 rupees from current levels. I think that's the more important and a stronger support. So if the stock breaks that support, then we can expect that the downward trend could get a bit more fiercer for Apollo Hospital. But at least as of now, the last 2 days, looking at the way the markets have shaped up, looking at the way today the indices are shaping up, I think it could be just a routine profit booking or a normal mean reversion for the stock price.
All right, Ashish. What about you? Apollo Hospitals fundamentally looking good. How are the valuations on these hospital stocks? And do you have any explanation as to why we might have seen a bit of a cool off in the last two sessions?
I think one reason might be that now company has shown intent that they are going to raise 1,500 crore rupees to fund the expansion plan. So this is the reason that market might be expecting that the new dilution will come at a lower price than the current market price, because stock has seen a vertical run up if you've seen last couple of months also. So this is the reason the stock is cooling down. And in my view, if you get this stock somewhere in 2,300 rupees level, you should add in your portfolio. This will give you certainly good returns over a period of time. So my suggestion will be let the stock further cool down, then only you add.
All right, moving on then to the second query, which is from Zishan Mehta, based in Bangalore. He bought 500 shares of Z Entertainment at a price point of 135 rupees a piece, and he wants our experts to share their long-term view on this one. Kunal, our viewer has already made a good amount of money on this particular investment, especially given the kind of rally that media stocks led by Z Entertainment saw in the recent past. Do you believe the up move could sustain in the future, especially since the time horizon is over a longer period of time that Zishan is looking at?
Congratulations to the viewer, because he's bought Z at a very attractive price. I think 130s and thereabouts were actually, I think if I'm not wrong, very close towards the March April lows for Z. I think I think so. It's a fabulous buy price for the investor, and I think which is why the investor has that capacity and that buffer in terms of the stock prices to absorb any kind of market volatility which could probably arise because of any reason as such, whether it's TFI selling or whether it's some profit booking which could happen. Now we've seen the media index do pretty well in the last couple of days. There are some signals and some signs on the indicators for the media index overall, which is leading towards a strong breakout on the short to medium term charts. Now on the back of it, I would expect that Z would also try and participate. We've seen the stock coming back about 200-day moving average as well. After staying below it for at least the last 1.5 month. So that's also another positive to add for the stock prices. So when I look at the charts, his cost price as well as the fact that the media index is going through a breakout mode, I believe that there could be a possibility that from a longer term view, Z could also go through a strong revival. The very immediate resistance for the stock is 225, 230. So I think if the stock takes maybe another few weeks to try and break past about this resistance, you will typically find the stock getting into a bit of a stronger uptrend. So I would suggest a hold, and 225, 230 is a breakout point for Z. Post that, I believe that there could be a run towards even a 280 for the stock price.
All right. Do you concur, Ashish, with what Kunal just said? How are the fundamentals, the growth prospects, earnings expectations, etc., as far as Z Entertainment is concerned, especially since the viewer here is looking to stay invested for the long haul?
I agree that future prospects of Z look promising, and my 1 year target for this stock can be around 300 rupees, which was their 50 to beat high. Again, the rationale are the kind of advertising revenue growth which they have witnessed in the last particular quarter is really superb. If you see their top 10 advertisers, they are spending one of the highest highest ever spend is there now over TV media. Along with subscription revenues have also shown growth. If you see June to September quarter, net profit also went up by almost 300%. So I'm expecting that this run rate of advertisements, particularly by FMCG companies, will continue to drive their advertising revenue growth. Company is debt free. Only thing is the promoter.
Okay, great. Thanks for that. both of you, Kunal and Ashish. Great to get perspective as always. It's time for a quick break here on Buy Now, Sell Now. But while we get there, market veteran Sanjay Dutt remains cautious over ITC, saying that the stock has underperformed due to management inefficiency. He also says that ITC is into businesses that are cash guzzlers. And of course, they're not very ESG oriented anymore, being cigarettes. Let's listen in.
ITC has underperformed because of inefficient management at the company, management of resources, management strategy. I think the management needs to wake up and understand what they are doing. You know, look at, for instance, they have a very small company, which may not be relevant here, but just kind of shows the strategy and psychology of management or the style of management adopts. They have a company called International Travel House, which they've been nurturing for, before I started my career probably in this business. Now, similarly, they have the hotels business. They're into so many businesses which are cash guzzlers. You can't really understand as to what the management is up to. And the biggest problem that I see with the management is what we have seen in some of the recent, episodes and fiascos we've had in some of the large banks. We've had these people, non-promoters, sitting at the top for last 35 to 40 years. I can tell you 5 or 7 people who've been sitting in the top management at ITC for the last 25 or 30 years. Nothing new is coming up there. Conveniently, cigarette profits are coming. You are just throwing them to FMCG. You are throwing them into hotels. And you are not really finding ways of creating shareholder value. So it's not got to do with ESG. It's not just you keep generating cash and you're giving dividends, so there is yield, so therefore shareholders should be happy. Shareholders are looking for growth. Shareholders are looking for a proactive strategy from a management. You cannot run the enterprise in a manner the way it's being run. That's what my assessment as an analyst is.
Welcome back. You're still watching Buy Now, Sell Now. Time to touch base with the management of NCC. Joining us right here on the show today, Mr. Vaidi Murthy, the Executive Vice President Finance, is with us. Mr. Murthy, good morning and welcome aboard. Wanted to understand the exact cumulative figure as far as your inflows for this fiscal are concerned. You had earlier guided for 10,000 crores for FY21. Has there been an update? What has been the orders received so far? And what is the visibility like?
Yeah, good morning. We are having good order inflow in the current financial year. Up to November 2020, we have bagged about 10,200 crores of fresh orders. That is already, we have achieved the annual guidance that we have given. And also there is a possibility some more orders may come to us. At the end of the second quarter, our order book is about 30,000 crores. But based on the order accretion in the month of October, November, and also the expected further order accretion in the remaining 4 months of the current financial year, we are confident we may reach a order book of about 38,000, 40,000 crores by the end of the current financial year.
Okay, great, Mr. Murthy. Thanks for that. So, if you're looking at a top line of about 7,700 crore, that means that in the third and fourth quarter, you would have to be doing something like 4,000 to 5,000 crore. Is that a realistic target, or, should we manage our expectations a little bit lower?
Yeah, it is quite realistic. The real growth in the current financial year is likely to be in the third and fourth quarters. You know very well what happened in the first quarter, but second quarter was an improvement compared to first quarter. If you look at the sequential growth, in the second quarter, we were able to report 30% top line growth and about 240% bottom line growth. That is very encouraging for us. And based on the current situation, already the order execution reached a level of 85 to 90% of the pre-COVID level, which is good enough for us. And based on this, we are confident in the remaining 4 months of the current financial year and what has happened in the month of October and November, We are confident about 4,800 to 5,000 crores of top line can be generated in the third and fourth quarters. And we are doing some marquee projects like the Nagpur-Mumbai Expressway, where the execution has picked up very nicely. Likewise, we are doing projects for central government agencies like Airport Authority of India, the Lucknow Airport expansion, and the Patna Airport. Likewise, we are doing for All India Institute of Medical Sciences, some 3 medical campuses in 3 states, all of the 1,000 crores and above. We are also doing a seabird project for the Indian Navy in Karnataka. So all these projects, the clients are AAA rated companies, and once the work is done and the bill is submitted and certified, we are getting the payments without much delay, and that gives us the confidence of generating 4,800 to 5,000 crores of top line in the third and fourth quarters put together.
Okay. Well, that sounds very encouraging. Mr. Murthy, I also wanted an update. You briefly touched upon execution. If you could tell us if it has picked up as expected, and are issues resolved as far as manpower and other resource-related concerns were there?
Yeah, particularly after this Diwali festival, many of the workers are coming back to the project sites. We are also proactively providing transport, etc., to them to see that they come back and start the work at project sites. That is giving good results. And right now we are around 85 to 90% of the project execution level compared to the pre-COVID level. That is good enough for us. And it may go beyond 90 also, maybe in the coming months.
Right, Mr. Murthy. And one more question we had is more relating to the working capital side of things. So what about payment cycle and what about the overall reduction in your receivables, and what's that going to do to your ability to finance all the work you need to do? Has that also shown a good improvement?
Yeah, thanks to a variety of measures taken by the Reserve Bank of India and also by the Finance Ministry to mitigate the hardship faced by corporates on account of COVID-19, some improvement is definitely there. For example, Reserve Bank has mandated all the scheduled commercial banks to provide up to 10% of the fund-based working capital limits as additional funding at MCLR rates. In the process, we got about 180 crores of additional funding at very fine rates from our consortium banks. That is helping us. And in fact, the moratorium declared by Reserve Bank, we have not taken, because we are comfortably placed money-wise. Likewise, Finance Ministry also directed central government agencies like NHAI, Airport Authority, Steel Authority, etc., to see that payments are given faster and quicker to construction companies like us. That is also helping a lot in terms of liquidity for us. The only issue is at some state government levels, some delays are there, but that also is not unsurmountable. Many progressive states are making payments faster and quicker. Earlier it was a problem because the state governments were focused more on welfare measures and healthcare measures, and payment to contractors took a back seat, but that also has improved to a large extent. So all these measures are helping us as far as the working capital cycle is concerned. And I'm glad to inform you that we are very comfortably placed in our working capital cycle. And also we are taking care of all our contractual obligations, not only to the banks, but also to other agencies, to suppliers, subcontractors, labor, etc., without much difficulty.
Okay, Mr. Murthy, it was great chatting with you and getting a good, clear picture of what's happening at the company end, how the order pipeline looking like, what the execution update is, and of course the situation with respect to financial position. Once again, thanks for touching base. The stock also saw a slight leg up since the start of the interview till now. It has seen a mild recovery of sorts if you look at it. Moving right on then, away from NCC to UPL. The company's management, Mr. Jay Shroff, he's the global CEO of UPL. He's come out and clarified on the whistleblower complaint. The shares have been hammered in trade, as we all know it, but the management assures that the matter, which was raised back in 2016-17, has been duly settled. Listen in.
The whistleblower complaint is a 2016-17 complaint regarding a rental of a house where I live in. And its matter was ended in 2017 when the board reviewed. First of all, the transaction is completely disclosed, and it is the audit committee reviewed it, the auditors reviewed it, and it was put to rest in 2017.
When you say it was put to rest, how was the report concluded? As in, what were the basis of putting it to rest?
The basis of putting it to rest was the fact that it was an arm's length transaction, and there was no related party issues as far as that transaction is concerned.
In relation to the whistleblower complaint, which you said was put to rest in 2017, have you got any fresh complaints? Because the nervousness in your stock, which is down 15%, means that somewhere somebody is nervous about what the complaint was.
Yeah, so we believe that this is quite malicious. We had given the press reporter complete access to information. He never visited us. He never came and asked us for any other further information. We asked him to come and look at the audit committee notes and also review all the documents, but he never took up that offer, and he still went on to issue whatever his note.
Okay, that was of course UPL management clarifying what's happened, but I mean the stock doesn't really seem to be recovering. We're still down in trade, and quite heavily I might add, so definitely raising some alarms on the Dalal Street today for sure. But let's switch gears toward banking a little bit, and SBI is in focus because Goldman Sachs had held a meet recently where they interacted with the management, and basically the asset quality outlook is looking really positive for SBI. They believe that even if your loans come in at 2.5% bad loans, that's a fairly decent outcome, and it should normalize next year. What they also like is that the provisions at 71 billion rupees or 7,100 crore more than cover the stressed asset pool. And if you look at the PCR on the stressed asset pool, it stands at around 60% versus banks like ICICI and Axis, which have 50% PCR coverage on the stressed pool. So all this is leading to earnings upgrades, and according to Goldman Sachs, at 0.4x FY22 price to book, it's extremely cheap valuation. So they've actually come out with a case for 31% upside, they believe, and that's not even a bull case. Their bull case estimate, and this is Goldman Sachs I'm talking about, is a 51% upside from here for SBI. You're looking at a target price of 360, 370 if what they believe is true comes true. So keep your eye out on that one. It's already moved a lot. It's made a low of 150 in March, and today we're sitting at 270, so nearly doubled. So move with caution, but if you look at the fact that it's less than 1 times price to book, in fact it's half times price to book compared to private banks which trade at 4 times price to book, one can understand the opportunity there, particularly for SBI because it is the leading PSU bank. So that was Goldman on them, and the second brokerage, let me remind you, to be very upbeat on them after CLSA, which also has targets ranging 300 rupees plus. Let's now switch gears though away from banking. ITC is in focus, and market veteran Sanjay Dutt remains cautious of ITC, saying that the stock is underperformed due to management inefficiencies. He also says that ITC is into businesses that guzzle a lot of cash and they are not ESG compliant. Let's listen in.
It's a very longer term call. You know, you can't game the next year as far as a stock like SBI is concerned. You know, if you go and look at some of the largest banks in China, you know, the top 3 or 4 banks in China and what their size is compared to what State Bank of India is, and it is the largest bank. Forget HDFC or forget ICICI or whatever. The question we must answer to ourselves, if we are all talking about the great success of manufacturing, the PLI schemes and everything else, ultimately, whether at the consumer level or at the industry level, there'll have to be credit, there'll have to be working capital, there'll have to be money flow. And that big money flow and the big credit conduit is got to be a bank like SBI. So if you're betting on India, there is no reason why you will not bet on SBI. And I kind of don't understand. I'm very clear, happy to keep a stop loss and again get stopped out, that you can't have an HDFC Bank or a Kotak Bank trading at a 4 or 5 times or a 6 times book, and the largest bank with so much of value in it, including its investment, subsidies, etc., will continue to trade below book. And credit quality is not going to be any different going ahead, whether it's HDFC or whether it's ICICI. And so I'm very well convinced that from now on, SBI will definitely outperform HDFC. And my analysis goes more on global comparative versus just a domestic comparative. And mind you, if you just go back and study SBI more detail internally, the way they have gone and done their systems, the way they've gone and set right their internal management processes, I don't see any reason why SBI will not give spectacular returns from there with a combination of betting on the Indian economy.
Well, that was the market expert Sanjay Dutt talking about SBI. The stock continues to sulk and trade. Slipping into a break here. More updates on the other side. Stay tuned. Welcome back. You're still watching Buy Now, Sell Now. Time to reveal our quiz answer for the day. We asked you which country has the highest market share in the global agrochemical export market. Options were India, US, China and Germany. The correct answer is option C, that's China. Host of people have got it right. Let me read out the names. Sukraj Matharu, Chetan Vikari, as well as Profit Must India. That's the Twitter handle. Don't have the actual name, but congratulations guys. And thank you for everybody else for participating as well. Let's shift gears and talk about what's happening in the cement space. What we're picking up is that CCI has initiated an investigation against cement companies of India, ACC, Ambuja Cement. These are the companies essentially on the radar. Vivek joins us with more details.
Well, earlier today we had told you about how most of the cement companies were under the radar of the CCI, the Competition Commission of India. We had told you about how the CCI was conducting raids at various locations across the country. And we had told you about how Ultratech, ACC, Ambuja and Shree Cement were on the radar of the CCI. Now, we had also told you about how most likely the CCI was said to be examining complaints of price cartelization by cement companies. And remember, this is something that could take a lot of the cement companies' valuations, as well as could act as a derating trigger, given the fact that a lot of analysts have penciled in strong pricing growth as well as good demand for the current year. Now, what has actually happened is that both ACC as well as Ambuja, both who are subsidiaries of Lafarge Holcim, have told the exchanges that yes, the CCI has initiated an investigation against the cement companies in India. The investigation is regarding the alleged anti-competitive behavior. What ACC and Ambuja are both saying is that have acted and continue to act in compliance with the competition laws. Also, what they are saying is that they are fully cooperating with the investigation and providing all necessary information. Along expected lines, a lot of brokerages have been spooked by the latest development. A lot of brokerages have said that this rules out any kind of price hikes that the company could take or the companies could take in the near future, and could also act as an overhang till the time the investigation is complete and if or any penalties are applied on the cement companies.
Vivek, let's now go across to Chandra, who's standing by with the latest on the Facebook lawsuit and all the developments there. Over to you, Chandra.
A very significant step coming in from the Federal Trade Commission, and if the FTC has its way, Facebook may have to give up its prized acquisitions such as Instagram and WhatsApp. It would have to unwind these acquisitions, which will lead to a long, lengthy and legal process. Now, this suit has been filed by the FTC and 48 states in the US. The suit accuses Facebook of snuffing out rivals over the years by buying them out and ending competition in the industry. And remember, this comes 2 months after the Justice Department also sued Google for not being fair with rivals. So clearly, big tech in focus in the US, trouble for big tech. First Google, now Facebook. We have to see what happens next. And there seems to be a bipartisan consensus. So both the Democrats and the Republicans want to go after big tech and really try to rein in the kind of dominance that they have today. Facebook, of course, has come out strongly against this suit. Its general counsel has called this revisionist history, considering it was the FTC that okayed the WhatsApp and Instagram acquisitions many years ago. And they also said that when they acquired them, they were very small companies, and it was Facebook that really helped in their rise. And it's also said that this sends a chilling warning to businesses in the US that no sale is ever final. So we have to wait and see how this goes. The last time FTC went after Facebook was a couple of years ago over privacy violations, and Facebook then had to cough up a fine of $5 billion, which didn't really move the needle much. But this time, if they actually go ahead and have to unwind their acquisitions of Instagram and WhatsApp, that could possibly be the biggest thing that's happened to Facebook in recent history. We have to wait and see how this pans out.
All right, thanks for that, Chandra. And on that note, completely out of time here and Buy Now, Sell Now. Thanks for watching. Keep it with ET now.